Welcome to Business Brief for today, Tuesday, 25th of August, 2026. And now the Nigerian exchange is recording a decline in market capitalization with 137 billion naira wiped off the value of listed equities as selling pressure weighs on banking and insurance stocks. The development is coming in as investors take profit from some of the market's recent gains, with a decline reflecting increased caution across counter despite the equity market maintaining a strong overall performance. Now, the all-share index is also easing, while most stocks are closing lower than those recording gains. Fidelity Bank is among the major decliners, alongside International Energy Insurance and Nemeth International Pharmaceutical, while Red Star Express is emerging amongst the session notable gainers. Now, despite the latest drop, market performance remains positive on a year-to-date basis, keeping the Nigerian equities market attractive to investors. The direction of banking and insurance stock is expected to remain important as investors continue to assess corporate earnings and, of course, interest rates and broader economic conditions. And now, United Bank for Africa and Fidelity Bank are delaying the publication of the half-year financial statements as both lenders await the necessary regulatory approval before releasing their results to the market. Development is affecting two major Nigerian banks and is prompting additional time for the institutions to complete the regulatory process, with the Nigerian exchange granting both lenders extensions to file in their financial statement. For UBA, the bank's board has already approved its half-year financial statement, but publication remains subject to final regulatory clearance. Fidelity Bank is also awaiting approval before releasing its audited results for the 6 months ended in June. Now, the delays are coming as the central bank continues to strengthen oversight of the banking sector and enforce tighter regulatory requirements. The timing is also significant for investors who rely on half-year results to assess earnings, asset quality, capital strength, and the overall financial position of listed lenders. The eventual release of the results is expected to provide fresh insight into how the two banks are performing amid changing monetary conditions and increased competition within Nigeria's financial sector. For shareholders and analysts, the figures could also offer a clearer picture of the resilience and growth prospects of the institutions. And now, Nigeria is recording increased activity in its oil sector, but the rise in drilling activity is failing to translate into a corresponding increase in crude oil production, highlighting continued challenge within the country's upstream industry. The development is raising fresh questions about the efficiency of investment in oil exploration, particularly as Nigeria seeks to attract more capital, increase production, and maximize revenue from its petroleum resources. More than 2,000 rigs have been deployed over the past decades, but crude production is continuing to face pressure from declining output at mature fields, delays in developing new assets, and operational challenges affecting production. The gap between drilling activities and actual output is therefore becoming a major concern for the sector. Now, the situation is putting greater emphasis on the need to accelerate the development of new oil fields and improve recovery from existing assets. Higher production remains particularly important for Nigeria, where crude oil continues to provide a major source of government revenue and foreign exchange. Now, for the wider economy, a sustained increase in oil output could strengthen government finances, improve foreign exchange inflows, and support investment, but without translating exploration activity into actual barrel produced. The country risks seeing increase investment without achieving the production growth needed to deliver a stronger economic impact. And that's Business Brief for today. Many thanks for staying tuned.